Osat? Hello?
It seems like Osat is just left.
No.
Okay. So I think, is everybody allowed now? I think
Yes,
almost
yes.
everybody is allowed to record now.
Yes, it's recording.
Yes.
So is there anyone who can't record?
I, for one, can record.
Okay. All right, so I believe everybody can record now. So if you try to record, you can't record, let me know so that I can allow you to record. All right.
I'm still trying to get the record though.
Who is that?
This Ghanaian on the line.
You are trying to record and it's not letting you.
He's not missing the record.
You can record. Just click your record. Are you using your phone or you are using your laptop?
Yes, my phone.
Oh, our phone may not allow you to record. I don't know. It depends on your.
Oh.
I think it depends on your space.
I think maybe those of us that can be able to record, we can put the video on the group.
Oh,
Okay.
oh, great. If you record, then you can upload it on the group. I'll also try upload, but the classes I had yesterday, I tried to upload them. The wedding letting me. I don't know what is up with that. I will get an engineer to look into that.
Okay, can I ask something to Osat before you start?
Oh yes, sure.
Yes, if you record, where does this thing save automatically?
I didn't get your question.
If I record, where does the recording saved? Under documents or under what? The recording.
It's going to save under your Zoom. I think in your Zoom. In your Zoom on your document. Who can remind me what we discussed last class? So we'll start from there. That will take it over again.
Last class, we're talking about the top-down analysis.
Okay.
That's what I remember.
Okay. Which includes entry points.
Entry points, even the reversal candles, which is the pure price action.
Okay. And I sent
the Bible study.
Candlesticks trading Bible PDF to the chat for everyone to get it. I hope you have all gotten it.
Yes, all the evening
stuff. Yes.
Morning stars, engulfing.
Have you studied it?
We are studying it.
Yes, on my side, yeah.
You need to study it very well, very well. As a trader, you need price action, irrespective of your strategy. And let me tell you this, every strategy works. All you need to know is how to apply them. And all you need to know is having your principles, your trading plan, having your emotions checked, and having your risk management, and which we'll be discussing next class. That's what we are supposed to discuss today. But due to the fact that you could not get the previous video, so I'm repeating this class now. So next class we'll be talking about risk management and dealing with greed dealing with, trading plans and dealing with fear and other emotional aspects of trading. All right. So now we'll go back to talking about top-down analysis. And when you are talking about top-down analysis, you are analyzing from the highest time frame to the lowest time frame, where you will now be looking out for your entry points. Okay.
Sorry, Asad.
Yeah.
Is it also possible to talk about how to grow a small account?
Pardon?
Is it also possible to talk about how to grow a small account?
Oh yes, that will be bonus. That will be bonus to the class. After everything, we'll now do that. Okay.
Okay, thank you.
And we'll see how we can trade live. Okay, we'll look at different entries and all that. Now, when you are doing your analysis, top-down analysis, you are actually making attempts to trade. Okay, you are analyzing the market and looking out for opportunities in the market where you can take advantage of, where you can take any trade. So before you can do that, you need to know your key levels, your zones, your reversal zone. One of the major purposes of analyzing trade from the higher time frame or doing your top-down analysis is for you to have your is for you to get an entry point, okay, and for you to identify key zones, like reversal zones, like at the resistance level would price reverse, would price break, and at the support level would price reverse or would price break. So these are the things that you will be looking out for. And for you to be able to do that, you need to identify the major reversal zones, the major support or resistance levels that you need to consider or look out for, or major trend lines. And these you can actually figure out from higher time frames. Okay, and like I was saying, that every strategy works. It all depends on your mastery of the strategy and your application of the strategy. Okay, but irrespective of the strategy you are trading, you need to learn price action. It does not matter the strategy. There are quite a number of strategies that are being traded today that are being applied in the market. Like I say, that market is just like God that understands every language. Okay, you speak your language, God understands it. I speak my language that is different from yours, God understands it. We speak all these languages at the same time, God understands it all at the same time. Same way, market understands every strategy that you apply. Okay, it's a communication. Market speaks a language. So the strategy you are applying is the language that market is speaking to you. You are communicating with the market. So, and when you are doing that, you need price action, irrespective of what you do, irrespective of the price, the trade or the strategy you are applying, you need price action. Institutional or smart money trading strategy, you need price action. Even if you are using indicators, you need price action. ICT, you need price action. The BMM or whatever, quite a number of strategies. Even if you are using what's it called? Like, yeah, indicators, or you are using all these web analyzers, harmonic scanners, you need price action as long as you're a trader, because price actions are what gives you some sort of confirmations. And that is what price repeats every now and then. It repeats it every single time in every market. Everywhere you see it, once you know it, you see it playing out. Okay, look at this resistance level now. Let's identify some sort of price actions here. This is a strong resistance level. This is daily time frame. And mind you, when you are dealing with highest time frame, here in synthetic indices, highest time frame that is necessity, that is important, is from daily time frame. You don't need all this monthly or weekly. They are not really necessary, because market has not been that long. I mean, most of the pairs in synthetic indices are not been long. They started trading it. So if you put like maybe crash 500 or crash 1,000, boom, 500, boom, 1,000, if you put it on monthly, you just see maybe 2, 3, 4, 5 lines, candles, or 10 candles at most. It won't give you anything. You won't even really figure out what you are doing there until you come back to like maybe daily. So daily is good for you to get strong. You can use daily as your highest time frame. Okay, and using daily as your highest time frame does not mean that you can also use weekly, especially if you are using your phone. But if you are doing it on the web, you can only get daily. We are using tradingview.binary.com. You can only get daily time frame. Okay, so that being said, now let's say, for example, price actions that I just talked about that you need in the market. You can't do without price action. You can't do without price action. Please give me 1 minute, please. Okay, now look here. This is price action. This is engulfing candle from resistance. See price drop. This is tweezer. Tweezer, see price drop. This is engulfing candle, see price drop. So these are the price actions you look out for. And when you see it, you get to trade. If you see it on a resistance level, you get to trade. If you see it on support level, you've got to trade. You've gotten some entry points, but you now also need to learn entry points, at which we will be digressing into. Once we start from the top-down analysis, we are going down to taking an entry, because when you are doing analysis, it's more like you are looking for entry points. All right. So if you are a daily trader, this is what you look out for. When you see this candle closes like this on daily, this candle closes like this on daily, this one that is opening now, you are selling, you are entering yourself. And you know, daily traders, they usually have the whole, you know, the whole candle trades positions up to like 24 hours or more than that. Okay, or for like a week or so. So if your stop loss is above here, if you are trading this pair and your entry is here, your first target will be here, right here. Okay, because this is impulse correction continuation. So this is where your swing low is. So your first trade profit will be here, second trade profit will be here, and you see price doing so. Okay, and it's going up. And if a daily trader is holding the trade, can keep going down until it starts giving you some signs, which that is where you'll be applying other strategies, or your strategy, the strategy that you know, like the flag pattern that I've taught you. You can see it forming up here for some days now. Then the next thing you are expecting is a move. All right, so now let's go into it. Which pair you want us to consider? Okay, let's go to V75. This is V75 on 24 hours, which is daily time frame. Now, first of all, like I said last week, First of all, when you want to trade, you go into the market, you consider pair. You master, after this class, I will talk about the importance of pair mastery. When you master a pair, you stick to that pair. Come rain, come sunshine. Okay, so now this is V75. Look into it now. First thing you consider is to know if the pair is bullish pair or bearish pair. I think almost all of you were in the class when I mentioned this last week. Were you all there? Did you remember when I mentioned
I wasn't
bullish
there.
pair?
I wasn't,
Yes.
I wasn't able to join. I was not feeling well that day.
Oh yeah. Oh, sorry.
Yeah, but
That was Mr. Elliott, right?
yeah, yes, please.
Yeah, sorry.
Thank
Okay.
you.
All right. I hope you feel better now.
Oh, yes, please. By God's grace, I'm fine. Thank you.
Oh, thank God. Thank God. All right. So now you need to identify the type of pair you are trading at first. And every pair, any pair you pick, you will know. And there are things that you look out for. Look at this now. For you to know if your pair is a bullish pair or a bearish pair. Okay? Now, this is a bullish pair. Why do we know it's a bullish pair? Because the lower low, higher low rather, has not been taken right from inception, right from when they started trading V75. That was 2018, right? Am I correct? I remember, yes. I started the same week the synthetic started. And that's 2018. Yes, I'm correct. That was when it started trading. They started trading it. And since 2018, once you zoom out very well, you see price has consistently going up. So this automatically is a bullish pair. Why do we say it's a bullish pair? Because the lower lows has not been taken. Now, lower low, lower low, lower low. Higher low rather, sorry. Higher low, higher low, higher low. These have not been taken. The only higher low that had been taken now is this. It has been taken. So now, before we can confirm that we have a bearish pair, two strong higher lows must be taken before we can know that, oh, price now is a bear pair. Okay, this one is taken now. This must be taken. This must be taken before we can confirm. Like, let's say here now, let's say price came, broke it now, retested and going back down. Then we know we don't have, especially because two pair will actually give you a trend line. Okay, and once it's broken, that structure is changed. That structure is taken. So from here now, if price can break the second higher low, then we confirm that we have a bear pair. But for now, we still have a bullish pair. Now, bullish pair is what we have. Does not mean we may have bullish market. That is where the difference comes. Now, with what price is doing now, let's zoom in, see what is happening. With what price is doing now, we have bearish market. We have bearish market. For example, this higher low had been taken. All we need now for a confirmation is a retest to this zone. Then a bearish market is fully confirmed on higher time frame. But if you go lower time frame, like 4 hours, you discover that we have started having this correction. We started having lower high and lower lows. So on lower time frame, we already have a downward trend. A downward trend. Remember what gives you a downward trend? When you have 3 to 4 or more touches of lower high, you have a downward trend. So here you have it. Now you will ask me, what is the essence? What is the essence of this bearish pair or bullish pair? The essence of bearish pair, identifying a bearish pair, is for the fact that bearish pair will sell more than it buys. Or bearish market will sell more than it buys. Look here, look the move here for the sell, and look the move here for the buy. Then after they get out of this level, look the move here for the sell again, and look the move here for the buys. Again, look the move here for the sell. Now, when we have a bullish market, look the move here for the buy compared to the move here for the sell. Now look the move here for the buy compared to the move here for the sell. Same thing you have with the bullish pair or bearish pair. You will have more buys than sells for a bullish pair. Let's look at it on daily time frame. Let's go back to daily time frame. So this is the first concept you need to understand about your chart. Any pair, any trading platform, any institutional platform, trading platform, whether stocks, whether futures, cryptocurrency, anyone you are trading, these are the things. It's very, very key. It's very, very important. Now look here. It buys more than it sells. It buys more than it sells. It moves more when it's buying than it sells. It moves more when it's buying than it sells. Moves more when it's buying than it's selling. Moves more when it's buying. So once you understand this, you now know that going to lower time frame to get your entry, or do your top-down analysis to get your entry, if price is buying, then you are looking for opportunity to buy. If price is selling, you are looking for opportunity to sell. If you have a bear pair, you are looking for mostly, okay, after identifying that it's a bear pair, you also need to identify if it's a bear market. Once it's a bear market and bear on a bear pair, you'll be comfortable, more comfortable and relaxed to look for entries. So on such market where you have bear pair and bear market, if price go against you, like maybe you are buying, you are selling, and price go to buy, you will have more confidence to hold because you are on a bear pair. in a bear market. So there's a possibility that if you don't risk too high and you have good account, price will still go back into your predictions or into your favor.
Hello, sir.
Okay. Yeah.
Please, I have a question.
Okay.
So, like for this particular example we are looking at now, so does it mean, can I say we are looking at a bear pair in a bullish market?
We are looking at a pair in a bullish market. I don't understand the question.
Okay, currently we are seeing the structure is almost being broken. You said until the second, until we have the second lower low broken, then we can confirm that the sell has started.
Yes.
But on the lower time frame, like H4, we can see that the bears are really like taking control, kind of. If you look at when we went to H4, and I'm sure if we go to H1.
Yeah.
So in this situation, what is the best option to trade now? Is it sell?
Like I've explained before, that we are on a bear pair, a bullish pair on V75. It's a bullish pair. But if you go to lower time frame like 4 hours, you discover that you are in a bear market. So there's a difference between bullish pair and bullish market. There's a difference between bullish pair and bullish market. What you are saying now on that 4 hours time frame is a bearish market on a bullish pair. The reason why V75 is still a bullish pair is because the higher low rather, had not been taken. This one had been taken, but this is the major higher low because it's on a trend line. So, and again, you can see the zone areas. You can see it here. So this is the first one, this is the second one. The moment it's able to break the second one and retest, then we are on a bearish pair.
Okay. Okay.
You get that? But
yes.
right now on 4 hours, we are in a bearish market. So this is bearish market we are in. So you are looking for opportunities to sell in a bearish market because you are going with the trend. You are not trading against the trend. Okay? You are looking for opportunities to sell. Price is coming from up. But you'll be conscious of your support levels because you are in a bullish pair. You are dealing with a bullish pair. So because every support level might be key. Look at when price got here. You know, this is V75. It moves a lot. Look at when price got to the support levels here. See how it goes back. That's a lot of pips. See, when it got to this support level here too, you can see that it reacts.
Yeah.
When it got to this support level here, you can see that it reacts. When it got to this support level here as well,
yeah,
it retested the support level here and went back up. And when it broke it here, it came back to retest it. So because this is a bullish pair, but the trend is changing now, is going downward. It has broken the first higher low. We are expecting it to break the second higher low before we can confirm that this is now a bearish pair.
Okay.
Do you get that?
Yes, please. Thank you.
So try and understand the difference between bullish pair and bearish, bullish pair and bullish market, bearish pair and bearish market. They are two different things. But the advantage and the reason why I'm exposing you to this is what so many money traders don't even know. If you even start telling somebody now, a professional trader would ask you like, wow, I didn't see it this way before. So some of the things that will come across based on your experience and based on your research. So the things that you learn from someone maybe what he has made a research about and have come to realize, okay, or from what he learned from somewhere, from somewhere. All right, so just please give me 1 minute, please. I quickly want to put my daughter on, sleeping, so I want to put her on the bed. We have bearish market right now. But when you are on a bearish market, that's another condition you need to understand now. When you are on a bearish market in a bullish pair, you need to be conscious of the support levels, because you will be selling in a bearish pair, bearish market rather. Now, price is at the support level here. It's currently at the support level. So you always be careful every time price sells to that place, so you don't continue selling. Even if you see, most of the times it will give you a fake breakout, to give you fake breakouts on those levels. Okay, like look at this evening star. Look at this evening star on that support level. It's fake, confirming to you that price will break. This evening star on a support level, when you see evening star, is telling you that price will break the support. Evening star is supposed to be found on a resistance level. You are supposed to locate evening star on a resistance level. Look at it here, and price will go direct opposite. So when you have it this way, direct opposite of it is price is like this. Look at it here. Direct opposite of it is like this, which is evening star. Evening star here supposed to give you a continuation, but it's kind of forced a little bit because you're on a support level. Until that support level is taken, then if you now have evening star right below this level here, then you can confirm, it's confirmed that price will go the way it was coming. Okay, so now I think my explanation of bullish pair, bullish market, bearish pair, bearish market is well understood, right? Because this was the first thing I explained before we now went into top-down analysis. Is it understood?
Yes, boss. It's understood.
Okay.
Thank you.
Now we want to do top-down analysis. Top-down analysis is actually identifying reversal zones. What do we mean by reversal zones? Reversal zones are areas where price reverses. Very simple definition. Price gets here, reverse, get back there, reverse, get back there, reverse. It's a zone. I need you to understand one thing. Market, there's no line that is put in anywhere in the market where if you are plotting indicators and all that, we are just using that to predict market. We are just using to analyze market. It does not mean that market has a particular line of resistance or a particular line of support or a particular line of trend line. It's just a zone. What we mean by a zone is that it's an area, and that area are usually between the wicks. Are usually between the wicks and the bodies. Those kind of zones like this. So this is a zone. So there's no specific line or level that you say, okay, you just put this one. So even if you see some people rule their support or resistance and put their line straight up on the wick, it's cool. If you put it on the wick, it's cool. If you put it on the body, it's cool. All you are after is that is a zone. All you need to understand that is a zone. Price may not get it. And that's what brought about the strategy I taught you at first, which is your exit strategy, how to exit, take profits. Okay, and whereby price you target the body. If you are targeting your higher low, you are targeting the body, not the wick. If you are selling now and you are targeting your higher low, then you are targeting the wick, not the body. Because it's all a zone. You see price gets here now. Now look at this price. Look at this one now. It got here. It didn't get up to this level. It went back. Came back and retest. Went a little bit up to this level. Came back. But if you see them, they are all in this area. They are all in this area. Even when it did a retest, all in that area. Even when it came back to it, it's all in that area. Even here. So it's a zone. It's a zone. And when you are marking up, you always try to mark up that zone. All right. So now, that being said, now let me give you another area. See, all this is a zone. It's a reversal zone. So when you are marking up your support and resistance, don't overwork yourself or trouble yourself so much, like looking for where to place it, whether to place it on the trend line, on the wick, or on the body. No, don't overwhelm yourself with that. Just look for the zone where you see price got into that area, went back, got to that area, rejected, price rejected in that area. Once you see it in two different places from the left side, you've gotten a zone, a reversal zone. You've gotten a reversal zone. That's all you'll be looking out for. Look. So anytime price get to that area, you are looking for opportunities to sell. Once you see price action in that area, then you know if that price action is saying price will continue buying or continue selling, or price will reject here. That is what price action is all about. All right. So now, that being said, let's do a top-down analysis from daily time frame. So what do you look out for? To be precise, you look out for the strongest reversal zones, which has to do with your support or resistance level. Okay, what I'm teaching you now is just a retail trader way. Okay, this is a retail trader way of trading, identifying support and resistance zone. And I know a quite number of traders who trade only support and resistance. All they trade is support and resistance. I know traders, and they are successful in trading. They are very, very successful. They are my colleagues. They are very, very successful. And there are some who trade only trend line. Their strategies are built around trend line. And I know quite a number of them who also trade in smart money concept, institutional strategy, or whatever. And I know one also who uses ICT. It's just so many strategy that can be applied. Like I told you, it's a language. Strategy is a language. Market speaks a lot of strategies, a lot of languages. All you need to learn is to understand, learn a language that you can speak comfortably. When the market is speaking that language, you understand it. Grab a language for yourself in the market so that when market is speaking it, you understand it. And that language that you understand is what people will be paying you to learn from you. That is exactly what you paid me to teach you now. And that is exactly what I'm teaching you. All right, so now you need to identify the support or resistance that is close to your price, to the current price, to where price is at the moment. Here, this is where price is at the moment. This is where price is at the moment. Price is currently at 7.1. Look at it here. 7.1 58, 53, 12, like that. So now, once you can identify a support or resistance or trend line, okay, and in this case here, we don't actually seriously, we don't have sort of trend line that's close to where the price is, okay, on daily time frame. What we have is, you are seeing a trend line here, we are seeing price breaking it already, okay, you are seeing price breaking it already on daily time frame, okay, but you don't really need this now because it might get you confused. So that is why I'm not plotting it. But there are instances where you see trend line price directly on the trend line like this. So you can start with that even on daily time frame. It doesn't matter. So it is what you see, you mark out. So what we are trying to do now, we're trying to box in the price and react to it. Okay, let's say price is here now. Let's say you have a support, a resistance here, and you have a support here. And price is here, moving here and there. So then if you put the price here like this, you know that if price busted out of this place and retest, it's going to this place. It's going to this place. If it breaks this place and retest, you know that it's going to the next zone. If you break it and retest, you know that it's going here. So you box in the price and react to it. Okay, so that's basically what you need to do with your top-down analysis, and that is understanding the market structure. All right, now tell me which support or resistance is a little bit close to the current price. I will mark out the numbers. I will mark out the numbers. 1, 2, 3, 4, 5, 6. Which number is considerable to be a support or resistance level that we can mark out for the current price?
6.
Okay, why 6?
Because that's where the next support zone is probably going to be.
Okay.
Number 2. Number two.
Number 2. Why number 2?
It has got 2 points in which you can connect the resistance level.
Okay. Okay. Any other opinion?
I will say if it breaks number 1, it's going straight to number 5. But if it fails to break number 1, then it's gonna go back to number 2.
Yes, I understand, but I'm asking the question that where should you put your support or resistance line? On which number? Of,
2 and 5.
Or which two?
I will say 2 and 5.
2 and 5.
Yeah.
I also say 5. I said 6 initially, but 5. I didn't see 5 earlier on.
Oh,
so 5.
Very good.
Yes, please.
So you are with me. So if I'm to give a resistance and support that is a little bit close to the price, is number 2 and number 5. You got it correctly. Because there are more. If you choose number 6, you will reach number 5 before you get to number 6, you know. You get to number 5 before you get to number 6. You know?
Yeah, that's true.
And the reason I do not put support level on number 1, the reason I do not put on number 1 is this. If you go lower time frame, let's go to 15 minutes time frame. It will get you confused because you can still see here where you can actually put a support. And that is the work of lower time frame. But if you put it as at that time, it will get you confused of what price is actually doing at present. So you don't need that as your number one. You don't need that number one as a support level where price is at currently. Does that make sense?
Yes. Yes, please.
Okay. So now we've selected 2 and 5 as our support levels. Okay. Now the next thing is go to lower time frame, which is 4 hours. So sometimes you need to zoom in like this so you can see your left side very, very well. It's very key when you are marking up. Your left side is very key. So now the next you're going to do is plotting your resistance and support, which for me, I will plot. Okay, where should I plot? Let me give you the number again. We have 1, I have 1, 2, 3, 4. So where should we pick for resistance and support? Between these numbers. Are you all there at all?
Yes, we are. We are analyzing.
So what's the question, Osad?
What number out of 1, 2, 3, 4? Which number should we pick as our support or resistance?
I'll say number 4.
4 and 7.
4 and what?
I would say number 1 and number 2.
Okay. All right, that's cool. So you're learning. We'll pick number 1 and 2 because they are together. They're in the same reversal zone. Even number 3, they are both in reversal zone. They're both in the same zone. Here, same zone. Same zone. Even this one, same zone. Same zone. Okay. So we'll pick that number. So then the next number, the next where you can put your resistance level is actually here, because this is also a zone. There's a zone here, a reversal zone here. All this that you see here. It's a reversal zone. So you are judging the future according to the past. When you are marking up, you predict the future according to the past. And the past is usually seen at the left side. All right, so you can zoom out now so you can see what is going on. So now let's go to the next lower time frame, which is 1 hour. So when you are doing your top-down analysis, you try to do it from daily to 4 hours to 1 hour, then from there to 15 minutes or 30 minutes. So from 1 hour and 15 minutes specifically, from 15 minutes downwards, you'll be looking for your entry points. From 1 hour, you already, now, remember that from your daily time frame where you are marking up, you know that price is you are in a bearish market. In other words, what are you looking out for? You are looking out for opportunity to do what? To buy or to sell?
To sell.
To sell. Opportunity to sell.
Yeah.
Okay. Based on your
Analysis.
projection of the bearish market. So now, when you are in the market, you should also identify when you get to, especially when you get to 1 hour time frame. On 1 hour time frame, identify where you are in the market. You are in a bearish market, right? But identify where you are right now in the market. What is price doing right there? And that is where you are now going to apply the strategy of flag patterns on 1 hour. Because you are going to 15 minutes to look for entry. Now, on 1 hour now, you'll be able to project to say, okay, is this price going, is it giving me a pattern that price will continue? On 4 hours, you will, of course, on daily time frame, you are looking for support and resistance, right? Then on 4 hours, you will also identify if price is at that support level or is at the resistance level or is in the middle. Then on 1 hour, you now identify where you are in the market. Is what pattern is price giving you in the market? Is price giving you flag? What type of flag is price giving you? Is it a continuous flag, a continuous bearish flag, or is it giving you a reversal bullish flag? Because you are in a bearish market. Remember all this that we talked about when we talked about flag. Can you all remember?
Yes.
Okay.
This is a bearish flag.
Is a reversal bullish flag. That is, price is coming from up, is selling, and it's now price now start doing all this some sort of channel movement downwards, and you can mark it out like this. So it's a reversal pattern that is giving you when you see it on 1 hour. Then you are expecting, you are now looking. So once you have seen these kind of things forming up on 1 hour, and you know your entry is here, this is where you buy your first entry. Your second entry is when the channel is broken. So now you will be on that formation or pattern that is giving you on 1 hour. You will now go to lower time frame. That is where you will now be looking for opportunity to either quickly buy as a scalping because you are in a bearish market, to buy to this level. But if you now see something like this flag, which is telling you is a continuous bearish flag, the price will continue, which is a bearish correctional flag, is a continuous flag. When you are looking for this, you are looking for reversal flag on a support, bullish reversal on a support. You are looking for bearish reversal on a resistance. But you are now looking for correctional flag like this in the middle of the movement. Look at price is coming from up. So all these areas, they are the middle of the event. But price now is at the support from based on our daily time frame explanation. So now you are looking for this. This is a continuation of price. So if you see something like this, that's when you'll be looking for entry for a swing trade. But here now, if you are seeing something like this, you know that you are scalping for now until you've gotten a confirmation that price is now bullish because you are in a bearish market. All right. So now I don't want you to get it twisted. I don't want you to get confused. Let me go back to where I'm going. So now price is coming from down, giving you this flag pattern. Yeah, you look for entry, you sell, stop loss above, and you are holding. Your take profit one is here. Okay. And if you have good account, you are holding. Another flag is forming. Has formed here. You got another entry here if you want, and you are holding. Then right now, you now ask yourself, because we're on a 1 hour time frame. And on 1 hour, you are looking for pattern. You are looking for where you are in the market. You are identifying your position in the market. What opportunity is market placing on my lap? So once you have identified the opportunity, whether buy opportunity price is placing on your lap or sell opportunity in the bearish market, then you will now go to lower time frame. You can even get your entry on 15 minutes. You can get your entry on 5 minutes. You can get your entry on 2 minutes. And we will do that now. All right, so now, on 1 hour, you see what price is doing currently. What is price doing, for God's sake? Can somebody tell me?
The price is consolidating at the moment.
It's consolidating. And remember, consolidation is a correction. So what type of flag is it giving you?
A bearish flag.
Bullish
What
flag.
bearish flag? What type of bearish flag?
It's giving us a continuation flag.
Thank you. Bearish continuation flag, which is what? Bearish correctional flag. I hope somebody is not getting confused with all these languages, all these words that we're using. So now what you do is what? What you're expecting is what? Price going like this to this huge, very strong support zone. Remember, if you have a floor that is made 24 hours ago, will be stronger than the floor that was made 4 hours ago, right?
If you have what?
If you have a floor, you made, like you just built your house now, and you called a bricklayer who comes to floor your house, and that floor was made 24 hours ago, it will be stronger. Will it be stronger than the floor that was made about 4 hours ago?
Yes.
Yes,
So
yes,
this
it will.
floor now, this is daily floor. This daily floor is a floor that was made 24 hours ago over time in a couple of months. And this one that you have in here is a floor that was made 4 hours ago. Remember that we ruled this support on a 4 hours. So you are expecting price to get here. So if eventually price breaks that support, then you are expecting it to get back to this zone. Now, when price gets to this zone, you are now looking for opportunities to buy as well. I hope all these are very, very clear to everyone, right?
Yes.
Yes, no.
It's clear.
Yes, yes, it's clear.
Very clear.
Good. I'm dealing with intelligent students. So all right. So now, what opportunity is price placing on our lap now? Very simple. What you do now is this. You use your trend line. Since you know that price is giving you correctional flag, so your correctional flag, you are looking for sell opportunities when price gets to your upper band. What do I mean by upper band? I've explained it last time when I was talking about flag pattern. This is upper band, this line, this level where price has been rejecting. It's a resistance, an upper band where price has been rejecting again and going back up. It's the lower band. So you are looking for sell opportunities when price get to upper bands. This kind of thing, I would not encourage you. If you are a good scalper, okay, you can scalp when you see confirmations. You can scalp to this level and take your profit. And so there are many traders who do that. They will sell here. That's consolidation. Buy here, sell here, take their profit here, sell here, take their profit here, buy here, take their profit here, sell here, until they see the consolidation taken or broken. So what opportunity price is, the opportunity price is placing on our lap now is to get an entry from the upper band. And you can't just get an entry from the upper band without getting a confirmation. And that confirmation is your price action. I told you, you can't do without price action. Before price will reject, it is those price action, it is what you see that will tell you that, oh, price will reject this level. A lot of you have asked that question before, or if you have not even asked that question, is in your mind that how do you know price will break the support or break the resistance, or price will reject the support or reject the resistance, or how do you know when price has rejected the resistance or rejected by the support? How you know is what I'm telling you now. So at the support level here, which has a lower band, you see something like this, even on 1 hour, you see something like this. This is a rejection candle formation. And that is the essence of that PDF that I sent to you. You need to go and study it very well so that you can understand it, you can master it. Okay, now look at this one as well. Tweezer. And see price one, tweezer, see price reverse. Evening star, see price reverse. Evening star, see price reverse. Evening star, pin bar, whatever, see price reverse. Price will call me back, giving you this. And somebody shared a chart with me after last week class where I taught you the entry point, giving you one of the secrets of crash 500. Once you see morning star on 30 minutes or 1 hour, somebody shared an analysis for me and showed me the trade he took and the profit he made on it with crash 500. He bought, he saw that confirmation. Was it on 30 minutes? Who was that? Hello, who was that here? Let me check my chat. Somebody shared it with me. If I can still trace it. Can you all hear me? Are you hearing me at all?
Yes, please.
Yes, we can hear you.
Yes, we are here, Osat.
Maybe today you revisit it again and share it with those of us that missed the class.
Yeah, somebody showed me the chart and pointed at that entry point that I showed, that I taught last week. That entry point that I taught last week about, let me see. I don't think it's sorry. Okay. Is Mr. Peter here? Mr. Peter, are you here?
Yes, I am, Osat.
Then why didn't you respond? Somebody shared this with me. You see, and the person you pointed at that entry point. Okay, you can see that arrow on 15 minutes on trend line. Okay, share that with me, and it was very phenomenal, and I really liked it. I said, fantastic. See the result, the trade he took.
Can you expand that screen?
The profit he made from it.
Yeah. Osat, can you expand that screen, please?
I don't know why it's not expanding though. Okay, I'll expand it now. You will see it. Can you see it?
Oh, yes.
Okay, let me even expand it more.
Oh yeah, a nice morning star.
Can you see it on trend line?
Yeah.
And it played out excellently. Played out excellently. And let me check the time frame. 4 hours. That's a lot of money. Using even lower time frame. Imagine if he uses a higher big lot, using lower lot. If he uses big lot, if you have big accounts and he uses big lot, that's a lot of money right there.
Yeah.
Okay, so and this was the profit he made from it. And I was very impressed. And it was last week we discussed this, and it's awesome. So now let's go back. Here, once you get that entry point, once price get back here now, remember what you are dealing with. You are in a bearish market on a bullish pair. Don't ever forget that, because that's what will guide your, is part of what will help your psychology. Okay, because when you are buying and selling, price will sell more in a market, in a bearish market. It will sell more and buy little. So all it's doing now is correction, okay, which is buying now. And how do you know it's going to buy, or how do you know it's going to reject at this level here? You know it's going to reject at this level because of your price action. So now when price gets here, you are looking for price action at this level, at this zone, reversal zone. All the here is a reversal zone. So once price get there, if you see a rejection price action, then you are selling. You enter sell. Put your stop loss above. See, when you have on this understanding, even if you have a loss on a trade, you will not be afraid to take another position, because you know what you are looking out for. You know what you are doing in the market. And this is how it works. This is how it plays out. It all depends on why a lot of people, even if you have loss rates of maybe 2 losses, 3 losses, why it affects quite a number of people is because of the risk you apply. Most of you will take risk, high risk, okay? You take high risk, and if price goes against you, you take another position. When you take that position plays out very well. But do you know what? The lot you now use this time is just like maybe 1/4 or 1% of the one you used when you had a loss. And that's one of the key factors that we'll be talking about next week. So if you have a loss, the lot you use, that is why you'll be conscious of the account that you have. The lot you use when you have a loss is the same lot you use on the next position you are taking. And that is why you consider your lot size and in relative to your account size. Okay, you risk like maybe just 1% or 2% or 3% at most of your account, so that if price goes against you, the next position you are taking, price goes in your favor. Please just give me 1 minute. 1 minute. Okay, she's also learning, so we are teaching you together. Say hi to everyone. Can you see her? Can you see her? I think
We can see her.
Oh. Hey, young one, when are you sleeping at this
say
time
hello
of the
to
night?
everyone. She just woke up now.
Hey, young man, when are you going to sleep at this time of the night?
She's a young girl, not young man. It's a baby girl. So we just cut her hair. So
Oh, I'm saying young one.
okay, yeah, young one, right? Yeah. All right, so now, thank you. Let's go back to class. So now, price is coming up here now. Remember, you're on a support level. So I won't even advise you to take any position here now. Okay, except if you see a rejection candle formation, clean rejection candle formation. When you see it, then you can sell and put stop loss above with your take profit right here with lowest time frame, because you are on a support level. And remember, is a strong support level. But because you are in a bearish market, that is why you can take it if you see a good rejection candle formation. All right. So now, how do you do that? Now, we can't decide now because price has not gotten to this level. But let's go to all these areas, these lower areas where we have seen price reversed these areas. But we already see, just give me 1 minute. Let me drop out, please. Hold on, baby girl. Price has not gotten here now. Let's look back and see on the lower time frame if we could have gotten entry around these areas. Of course, we got entry confirmations on higher time frame here on this one with this engulfing candle, okay, and with this some sort of morning star, okay, and we'll get by here with this, evening star. We'll get by here with this some sort of morning star, okay, and this pyramids, okay. But let's go on a lower time frame to see if we would have gotten an entry around here earlier than we have gotten entry on 1 hour. If we are supposed to have gotten entry on lower time frame than the one we found here now on 1 hour, because if you are to follow this one, then your entry will be after this candle close here, which will increase your risk if your stop loss is above here. And if we are following this now, your entry will be here, which stop loss will be here. All right, so now let's go to 15 minutes. I hope you are all following.
Yes, we are following.
Yes.
Okay, and I hope you are understanding along the line. You are understanding it quite well.
Yeah.
So now this is 15 minutes. 15 minutes. On 15 minutes, we've gotten a confirmation here for a sell, which reduces a little bit of that of 1 hour, because that of 1 hour around here was here. So reduces your stop loss level, where you put your stop loss, it will reduce your risk. But let's go even more, a bit lower. Let's go to 5 minutes. Okay, let's wait here. 15 minutes. Let's go back to 15 and I quickly want to show you something. Look, on 15 minutes, Twizzler give you an earlier entry than that confirmation that we saw on 1 hour. On 15 minutes. Same thing here. Pyramids give you an earlier confirmation. Then Morningstar give you an earlier confirmation on 15 minutes here than you see here. So once you have seen what price is doing on 1 hour, okay, the position where you are in the market, what is saying on that 1 hour, you now go to lower time frame to look for these price actions to get your entry. Are you getting value?
Yes.
Are you getting value?
Yes.
Yes, sir.
So now I'm showing you all the secrets now.
Oh, definitely, Osad. We are getting a very much.
Okay. All right, because that's what you pay for, and
Yes,
it's my joy teaching you and showing you all these secrets.
Yes, sir.
All right, so now here, look at our entry for sell here. On 5 minutes, look at Pimba and Tweezer together in one. This your sell, which minimizes your entry, because the one that we saw on 15 minutes, your entry will be here. But the one that we confirm now on 5 minutes, your entry is here, which minimizes your risk. Because if your stop loss is here, minimizes your risk. Look here. Look here. So even if we go on lower, a little bit lower time frame, we will still get earlier entry than this that we have here. Let's go to 2 minutes. Okay. Remember the entry that we saw on 5 minutes was around here. See this one. Your entry will be here. It totally reduces your risk. Look, your entry is here. Totally reduces your risk. Look, your entry. Evening star. Haramit. Look, engulfing. Pemba. And that is V75 for you. And this is how we trade it. And you can trade it more so. Okay, so then as time goes on, you can now start applying other things, like maybe if you want to get entry from the middle, because you are getting entry from the floor and the roof. Then if you want to get entry from the middle of the ocean, because this is more like the middle now. So there's another strategy for that. Okay, but that one I won't talk about that one now. All right, so now that is it. So before you can get another entry now, you are waiting for price to get to this level to give you price action. So this is what a quite number of mentors will not show you. This is what quite a number of teachers or somebody you pay to train you will not show you, because this is key in trading. This is key in trading. Okay. And so far so good. Let me ask you, have you learned one thing or the other that makes you a better trader than before we started this class?
Yes.
Yes, Osad, because so far in this past week, I've been trying to identify the flex on V75 and volatility 10 and step index. Oh, I'm so happy, man. I got them right. The way you taught me last week. Eh? So I've realized that I can only trade even with flex only.
Okay.
Yes.
Any other person? I want everybody to talk now. I want everybody to talk. Have you learned something that you have never even known before that right now makes you a better trader than before we started this class?
Yes, I've learned also, especially with regards to plotting my trend lines and the flag patterns, like the example we are currently looking at. How you did the analysis from D1 to H4 to H1, and then now coming down with regards to what to look out for entries. I mean, I just need to practice more and then get it right. Thank you.
Okay. Before we continue, kindly give me 1 minute. I want to put on my journal.
Okay.
NEPA just took light, and my inverter is not connecting.
Okay.
So let me just put on my journal. Are we together?
Yes.
Yes, we're
Yes, we
together.
are here.
Okay, so I want more responses. Have you become a better trader from what you have learned so far? By the time you put them into practice, you have to, because so far so good, we've learned a lot that you should have put to practice and should have made you a better trader by now, make some money right now. So I want more answers. Have you learned something different, something you've never even heard before, you've never learned before as a trader, and right now that you've just learned it will make you a better trader?
Yeah,
Yes, sir.
for me, it's the week matter. I think the week matter has changed everything for me in terms of where to put stop loss as well as where to put take profits. When trading boom and crash, I think I'm very accurate in terms of where I put my take profit.
Okay, that's very good. That's very good. Okay, so now before we continue, we'll check the time. We'll continue. We'll consider one more pair.
Can I make my comments?
Okay, yeah.
What I master most from the training is the trend line, and I'm looking at it. I now study it more. I recognize it more, and I look at it. Even the last crash, the day I was arguing TP or no TP, I was looking at the trend line as broken down. I would not to have taken that trade because I look at it that it could boomerang, but since you called it, I took it and I just fixed it. I didn't check to have closed it even before then. Then aside that, do we need to master in taking trades? Do we need to master beginning of 4 hour, beginning of 1 hour? Is it relevant in entering trades?
Yeah, if you are there are intraday traders and they focus more on 4 hours time frame, using 4 hours time frame as time frame, and the candles formation there as their confirmation for entries. And there are day traders who use like daily time frame, to look out for their entries. They will wait until the day closes, what price close with the time. There are day traders that they don't even take any trade the whole day or the whole week until they see that confirmation on daily time frame before they take the trade, before they take their entry. Okay, why other traders like scalpers and swing traders also, they look out for like maybe 1 hour or 4 hours to get their position, to see what price is doing in the market, and go down to the lowest time frame to get entry confirmation. So it all depends. If you want to look at 4 hours to get your entry, you can do that. And if you want to go to lower time frame to get yours, it's also very, very good. Have I answered the question?
What I'm saying is, do we need to wait till beginning of an hour? Because sometimes I study when you send signals, it may be beginning maybe 7 o'clock, maybe after 7 in the morning, or I'm talking of Nigerian time, or maybe after 11 in the morning. That it will be beginning of maybe another one. It could be coincidental, but that's what I study. Do we need to wait for that, or is not? And sometimes it changes. It beginning of changes in price action. I noticed that.
You mean 4 hours? I think I don't get your question.
4 hours. Yes. 4 hours. Sometimes 1 hour. Beginning of an hour. If it was buying, it could just change and start selling. Is it relevant? That's just, or is just coincidental?
Okay, can you put your question in perspective? Ask it again so that I can get it correct, because I've not really gotten it correct.
I think maybe to be able to help in terms of the question, I think maybe it's talking about if you observe a 4-hour candle and it's playing out, do you need to wait for it to close and then another 4-hour candle begins to emerge so that maybe the price action can play out, or for you to find an entry?
Okay, is that the question you are asking?
It's actually finding an entry. Finding an entry.
Yes, that means if that is the question you're asking.
Candle closing and opening.
Yes, if that is the question you're asking, that means I've answered. I said that there are intraday traders that look out for their entries on 4 hours. So when they see it like on that support level or resistance level, now if they see engulfing candle on 4 hours, that's their own entry. Or maybe money star on 4 hours, that's their own entry. But before you can see that on 4 hours, you know that it will have moved far above. So it will increase your risk taking. Most of intraday traders that trade on 4 hours and day traders on 1 hour on daily time frame, they have massive account and they hold position for a very long time. They hold position for like days, weeks. So they swing trade a lot. So, but for intraday traders like scalpers or swing traders that hold like maybe for a few, days, and you are just following a move, and when it gets to where you think it will stop, you get out of the market. Okay, those ones, they usually look at that confirmation from lower time frame. Then an intraday trader too may decide not to wait until he get that confirmation on 4 hours, but we'll go lower time frame. Once he sees he's on support level, we'll wait and we'll go to lower time frame and get his entry, except if he's ready to wait till that 4 hours. And 4 hours may not give you, 4 hours, maybe you are expecting 4 hours to close as a pin bar, and it's been forming, it's almost maybe 1 hour for that pin bar to close. And somehow, especially if you are trading currency, if spike comes and you just destabilize it, you have to skip that trading and you wait for another day to see that same confirmation you are looking out for. But meanwhile, you will have gotten that confirmation on lower time frame that you will have, where you are waiting for it to play out, you will have gotten enough move. You will have followed the move that, let's say that you are looking for that entry around here as a 4-hour trader, as an intraday trader. But you have missed all the move from here. But if you are looking for that same confirmation from lower time frame, you will have gotten your entry right from the bottom end and minimizes your risk. And all the move here, you will have caught it. So when price is now playing pranks here, you will have gotten out, or you will have saved some profit, made some profits. That is just the difference. But however, whether a daily trader, intraday trader, scalper, or swing trader, all you are after is to make money. And like I said, every strategy works. It all depends on how you apply it and your understanding of it, your mastery of it. So if you are waiting for 4 hours to give you a particular confirmation, you have to wait till it plays out. And if you wait, you didn't get it, you wait for another 4 hours for it to play out. Does that answer the question now?
Yes.
Okay. So as I was saying, I was heading somewhere that you have learned one thing or the other so far now, okay, because we are getting closer to the end of the course, and few things I will need you to still, I'll give you those ones as bonus or fixed time even after the month has ended. Yeah.
Sorry, man. You were about to show us something that is the main key of the trading. You said even the mentors, they will never show you. What was that?
That's what I was saying. The entry that I gave you, that when you look at this, you go to lower time frame to get that entry. A lot of mentors will not show you, will not give you that entry. I've attended a mentorship class. I've attended a mentorship class that I was asking when I first started out as a trader. I was asking this question. They will give me all these analysis and all that. I was asking, how do I know? How do I get an entry? How do I really know it's time for me to buy now? It's time for me to sell. How do I know?
Yeah.
They don't go there. They don't tell me. They didn't. Until when I continue trading and further studies and getting other mentors, I got to know what you get to know that it's time for you to enter. Okay, coupled with some other indicators that you now maybe add to it and look out for it and all that. Okay, so this is the secret. Once you have cited it on 1 hour, you have seen where the position you are in the market. If you just follow the way I've explained it, watch this video again. If you follow it the way I've explained it, you will get it accurately right. So you go, once you get to 1 hour and know the position, know where you are in the market, you now go to lower time frame where you now get your entry. You look out for price action. Okay, so that being said, we will consider one more pair and analyze it. But before that, I will want you to do me a favor. Very, very key, very, very important, which you can do tomorrow. I will really, really love that. You do me a favor by doing at least 1 to 2 minutes video. You do 1 to 2 minute video giving testimony, mention my name, SAT, and testimony about the class, what you've been able to learn when, before you met me, before you sign up for this class, the value you've gained, what you paid, what you have received, the lecture, the training you have received, it's worth it, and recommending me to any other person, how it's going to impact them, how it's going to be of help to them. So that's just the video I want each of you to do and post it to our main chat. I would really, really love that. So do each of you, it's an assignment. It's what I would want each of you to do as a testimony and send to the chat. Okay, so we'll continue. Give me any pair that you want us to consider.
Crash 500.
Yeah.
Let's do step index.
Step index.
Yeah, because we are doing crash as part. We are doing crash as part of our signals. So let's do step index.
Step index is very good as well.
Yes, yes.
In fact, you can, with minimum account, you can do a lot with step index.
Yes, I've realized that, especially with the flex.
Yes, and the new pairs they just introduced, jump. I love that pair. So I'm still working on the pair, building a particular strategy on it. Okay, so let's see. Step index. This is what? This is 24 hours. Now, 24 hours. What is the first thing? Oh yeah, you'll be talking now, giving me the response. So what?
First step, top-down analysis approach.
The first top-down analysis approach. You have skipped 2 major things.
We check.
I think the market is in a bearish mode. It's a bearish market.
You are still mixing it. There's a difference between a bearish market and a bearish pair. Bullish market and bullish pair. So once you pick up a pair, you first identify if it's a bullish pair or it's a bearish pair. At this moment, do we have a bullish pair or a bearish pair?
Bearish.
We have a bearish pair. Why? Why do we
Because
have a bearish?
the higher lows have not yet been broken.
I don't understand.
But Osad is right. The higher lows have not been tested.
Lower lows have been taken. Lower lows, you are dealing with a bearish pair, so you are not dealing with higher low or higher high.
Lower lows have not been taken.
Lower lows have been taken. It is the lower highs that have not been taken. This is impulse, correction, continuation. Okay, this is lower low. This is lower high. Lower low is taken. Lower low is taken. Lower low is taken. Lower low is taken. Now we're on the fresh low now, but higher low, I mean lower high has not been taken. Lower high has not been taken. Lower highs are not been taken. Do you get it?
Yes.
So
yes.
that is why, that is what makes us to know that we have a lower, a bearish pair. So that being said, you have a bearish pair. Now, are you in a bullish market or a bearish market? When you zoom out, when you zoom in, you will now know.
We're in a bearish market.
We're in a bearish market. So now we are in a bearish pair and we're bearish market. That's to tell you that price will sell more than it buys. Look at it. Price sells more than it buys. Price sells more than it buys. Buy little, sell more. Buy little, sell more. Buy little, sell more. Buy little, sell more. Okay. So now, on daily time frame, you are categorically looking out for certain things. What are you looking out for? You are looking at what chart presents to you. That's what you are looking at. That's what you are going to mark out. What does it present to you? I told you, you look out for either resistance or support that is close to where the price is, or trend line. And if you look at this, you can see a very honorable trend line. Meaning that price has been getting here, drop, get here, drop, to the trend line, 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 drop. So far. So that's to tell you that that trend line is very, very key. So you are going to input that on daily time frame. So now, at the same time, you can also look for a support or resistance that is close to the price, which we have here, that is close to the price, reversal zone. So then we'll go to 4 hours. We'll look out for a resistance very close to the price. I'm going to 1 hour.
Osad,
Okay. Yeah.
can I ask something? To look for support and resistance that is closer to the price, must we do that on daily time frame or 4 hour?
Yes, you will do it on daily time frame.
Okay.
Daily time frame, and even on 4 hours, you are looking for the same thing. You are just trying to look at areas that price, areas of rejection zones, And
Okay.
rejection zones are those zones where you have support and resistances
Okay.
or trend line. So, and that is why you are looking out for them to mark
Yeah.
out.
Okay.
Because when price gets there, price will react. Price gets there, price will react. So now you know that price is falling, price is coming from up, going down, okay? And if you look at it on a bigger picture, on 4 hours, you can see what flag are you seeing? Are you seeing some sort of flag?
We see bearish flag.
It's
You are seeing some sort of bearish continuous flag. This is 4 hours, remember? So you are trying to understand your position. You are trying to understand where you are in the market. Remember that I mentioned that you understand where you are, your positioning, know where you are in the market. Now on 1 hour, we're on 1 hour now. So we are trying to know where we are in the market so that we know what we are looking for and what advantage is placing on our lap. So now you see how we support and resistance around here. The more you mark up, the more you get better at marking up. The more you don't mark up, the more you don't get better at marking up. It's very, very simple. What I'm considering, if you try and get them, I'm considering this area, price has rejected. That's what brought about this line. What brought about this line is this. That's what brought about this line, close to the price. Okay, so now this is 1 hour. Okay, let's zoom in. This is 1 hour. Now you now understand, like I told you, you now understand, know the position, know where you are in the market and what market is doing. Okay, you know that on a bigger picture on 4 hours, you are in a flag, right? You are in a flag. You are in a flag, right? Nobody's responding. Are you tired?
Yes, we are in the.
Okay, we are rounding off now. In the next 5 minutes. So now, see, price has left. Price came from here, left here, came back here, did the same thing, here, went here, did same thing here, went here, came here again, did the same thing, drop. So now price is coming. Price has left this place. So there's a probability, And remember that we have a trend line on daily time frame or 4 hours. Let's go back to 4 hours. Look at 4 hours. So there's a probability that price is coming to this trend line again before dropping. Okay, price has left this place, came back here, gone back here, came back here, gone back here. So there's a probability that price will get back to this zone level. There's a resistance here. Price might be heading here before giving us a drop. So let's go back to 1 hour and finish the work. So for that reason, since you know what price is doing on 4 hours, now you are knowing your positioning on 1 hour. Okay, so now you come here, look at what price did here. Price came, give you impulse, correction, impulse, correction, impulse, giving you a bearish reversal and dropped. Now price has dropped, and where price has dropped to is here, where it's right here on a support here, support zone. You can use this to make it comfortable for you. Support zone. So now, this is where you will have looked for. Are we all together? Hello?
Yes, we're together.
Yes, please.
Yes, yes.
Okay. So this is where we will have looked for an entry point.
For the reversal candle.
Yes, this is where we will have looked for an entry point to buy. Because price dropped as a result of this pattern formation. That's what made price to drop. Anytime it's forming, anytime it's giving you that pattern formation, it's going to play it out. Especially on vol pairs. But on crash, sometimes it doesn't play it out. Look at it here, price coming down. See this bullish reversal pattern and see the move. Okay, so now this one it took longer. This one it did some sort of manipulation here, and this tweezer will let you know that price is dropping. Okay, so now here you know that price is at the support level. This is support. So now let's go to lower time frame. If we would have gotten an entry that suggests price is going to reject this level, it's going to be rejected at this level. Let's go to lower time frame. When price got there, if we would have gotten an entry to buy, of course we would, because this is a pin bar. Here's a pin bar. Let's even go further to 5 minutes. Perfect. Perfect. Do you see this?
Yes, sir.
So this is
Morning
your entry
star.
point. This is your entry point. And your stop loss will be below. And you are buying. Your first take profit will be right here. And this zone. Your second take profits. Because you are targeting the trend line that is up here. Do you remember that on daily time frame?
Yes.
On H4.
Yes.
H4, daily time frame and H4. And remember that price is in a flag on 4 hours in a bullish flag, saying price is continuing going down, but it's going back up to retest that place before dropping. So these are the things you understand with the market before trading. So if you have gotten your entry here, if you have bought here, you will have made a lot of money getting here. And price is about to hit take profit now. And the moment price hit take profit, you're out of the market. Then it gave impulse here and did a correction here. Now let's look at this correction. Let's look at lower time frame, a little bit lower. Let's go to 2 minutes. If we'll have gotten another entry there. Look, engulfing. And he even gave tweezer, Haramit here. Look, engulfing. You buy here. That's second position. First position at that morning star here. second position here. Then your take profit all here. Do you all understand now?
Yes, yes.
Yes, sir.
Okay. So any question?
Osat,
Yeah.
my question is, how do I save this recording on my site?
Okay, some of those that are recorded it already will share it on the platform.
Okay, no problem.
Though I'm recording it, so I will also try to upload it. If it doesn't go, those that have recorded it now, there are quite a good number of them. Alex is recording it, Elliot is recording it, and
me too, Tiburi.
yeah. Okay, so
Osat,
yeah.
Just for 1 minute. Last time before my network, I had a problem with my network last week. You were talking about the Fibonacci indicator.
Oh, okay. Fibonacci retracement.
Yes.
Let's go back to 1 hour. What Fibonacci retracement does is to help you figure out when price is retracing. When price has made its move, a huge move, a long move, now is correcting. Fibonacci helps you to figure out where price is correcting to. That's what Fibonacci does. Okay, so now let's take for instance. You use Fibonacci when price is trending. And there are areas that Fibonacci is well considered, like 50% retracement or 61.8 retracement levels. So look at this move. Look at this move from here. From here to this place. When price retrace, it will trace back to 61.8 before continuing selling. That's what Fibonacci does. So when you understand that concept, if price is dropping and you are buying correction, you know the area you are supposed to get out. So you can't really use Fibonacci here now because it's going in form of a channel in a flag. So you can't really apply Fibonacci here. You can apply Fibonacci maybe like if you are using like now, let's say on lower time frame, and you're just measuring a little movement between a distance, like let's look at this. Let's say you are considering a movement from this place now to this place. You are taking your measurement from here to this place before price. This is impulse, and this is the correction. Look at where it corrects to. It corrects to 50% before dropping. So a Fibonacci trader, once he sees this move and the correction starts, he will place his Fibonacci. And once it gets to 15 minutes, he will go to lower time frame and look for price action, a candle rejection. And once he sees it, he enters. And especially if that area has a support or resistance level, which you have here, it sells. So that's how Fibonacci is used. Now let's look at another place. Look at this move from here to this place. look at it, a move from this place to this place. Now, look at it, 61.8 here, 61.8, and then the reverse. So usually we look at both 61.8 and 50% retracement. So how do you plot your Fibonacci? That's another question that I'm expecting. How do you plot it? If price is coming from down, going down like this, you plot your Fibonacci from up to where price is going, to where price starts correcting. So 100% will be above. So 100% will be here. 1% will be here. So it's 0%. So if price is correcting to 50%, that is what it has sold is buying it back to its 50%. Sometimes it buys it to 61.8% or 78.2%. But at most, when it now gives you 100% retracement, sometimes it gives you 100% retracement. And when it gives you 100% retracement, that's when probably price will break the resistance. Okay, so the concept of Fibonacci is on its own it's a concept that takes more or deeper explanations. But this is just in a way whereby, because there are Fibonacci traders that they only trade Fibonacci. Okay, I have a colleague of mine who only she trades Fibonacci alone, only Fibonacci.